We start today's market talk. The key focus should be on analyzing on pricing power versus input cost headwinds. So now listen to what I'm saying now very carefully. Now see businesses like Aarti Industries, Naveen Flooring, they have pricing power to negotiate the challenging macros and they are doing well. Marico, they expanded margins due to easing input costs. Copra prices have come down, so they are doing well. But on the other side, Godrej consumers, they are facing issue due to rise in input costs due to crude oil. Hence, the earnings were bad. Even RR Kabel and Polycab, they are saying that we are going to face rise in copper prices due to Middle East export disruptions. Then see companies like Hero Moto, Bajaj Auto, they are riding on premium push. So their margins are improving because they are selling more premium bikes and also relying on EV scale up and on exports. Then stocks like SJS Enterprise, they are targeting 1.5 to 2x industry growth due to increasing content per vehicle for premium products. Productivity gains have been observed in Coforge and Misho. So they have become more useful, they have become more efficient, reduce their cost, and then improve their margins and earnings. So you have to see who is doing what. So the companies that will come out ahead are not the ones betting on the conflict to end and the uncertainty to go, etc., but those that have buffers against it. Pricing power that offsets input cost surges, strong order books, and domestic demand. So we have to look for such businesses. Sorry, I didn't even do this right. So, market outlook. Trump's joy at stock market highs, as well as jaw boning to push oil prices down, underline the importance that the US administration attaches to the financial markets. So, if you have seen, a reason for high is the AI rally, also seen in Taiwan and Korea. Other reason is continuous dovish remarks by the US president and administration that an end to the Iran war is near. So the stocks rallied and oil prices dropped on every such remarks. So they are managing the markets. And Trump went with tweets, etc., saying that the stock markets are at all-time high, etc. So don't get distracted by that because things can change very quickly. Problem is with such a relief rally is that one missile strike, one failed negotiation headline, one Israeli military operation, or one disruption in Hormuz traffic can reverse sentiment overnight. Eventually, physical supply and earnings reassert themselves. So oil tankers cannot be moved by sentiment alone. News was US and Iran are closing on one page memorandum with 14 points to ease tensions. But after that, what happened was the crude plunged below $100, bond yields softened, and Indian rupee also recovered. But the core disagreements remain unresolved. Now, what is happening in the Indian markets is mid caps and small caps are outperforming the large caps, and it is not because of some frenzy. Their earnings are also good. The mid caps revenue and earning growth is pretty strong. These are NBFCs, not the banks, but the NBFCs, which are lending to MSMEs and consumers, etc. Consumer facing companies, real estate, utilities, etc. Now, if you see here, after this news, the rupee had recovered, but it had made a fresh high or a low against the dollar. So one should be careful with this. The other is because of this, the bond yields which are spiking up also recovered, but they are back up. And as I was mentioning, you see the mid cap select index, it's at a fresh high, 14,491. So it has broken that resistance line and it has gone up. It was up 4.82% last week. Small caps were up 4%. This is a small cap 100 index. So it has bounced very nicely from the support it had, and now it is around less than a percent from a less than 4-5% from the its previous all-time high. So this is this segment of the market which is doing very well. Now coming to FIDI data, FIs are short on index futures, short on index calls options. They have sold calls, and they have bought index put options. They are strongly bearish, and they are adding to their bearish positions. So if you see here, now pros, they are long on index futures. They have sold call options and bought. Sorry, yeah, they have sold. Sorry, I'm seeing clients. They have sold call options and bought put options. So they are medium bearish. And clients, if you see here, they are long on index futures, bought index call options, and sold index put options. And they are strongly bullish. So the setup is FI is strongly bearish, pros medium bearish, more put options, index put options they have bought, and clients, they are bullish. So whenever these clients put options positions go above 6 lakhs, that is the time when the positions become extreme, and the markets always have extreme moves. So just be careful. Now coming to monthly data. So if you see on the days, there were big moves last week. Uh, FIs had turned bullish on 6th May, and the index went up 1.24% after the ceasefire announcement. And then on 8th May, they sold in options and futures, and then it went down roughly 0.5%. So this is what is happening in cash. FIs have been selling, and DIs have been buying. Now coming to US, 10-year yields, if you see, eased, came down due to cooling consumer sentiment and softer inflation expectation. Dollar index also eased due to easing of geopolitical tensions. Brent crude is oscillating, but you saw a weekly decline of nearly 8%. But renewed escalation may lead to a rise, etc. So just this is just a benchmark. So if you see, anytime it goes up, Trump starts talking dovish, it comes down, will come down, then there will be one escalation, it will go up, back up. So they are playing the market. Gold is now slightly started going up. It's in a stabilization zone now, in this 4650 to 4750 dollars zone, and the bullish outlook should be there if global fiscal sustainability concerns accelerate. So if there is if the people start thinking that world economies will not do well, there would be a lot of printing of money, and the US will be, all the central banks will be pumping in money, etc., into the economies and the governments, and there would be recession. So gold will start doing well. Similarly with silver, it has reached from this, it has stabilized around the $70 zone, and now it has moved to $80. It has got additional input of heavy industrial utility for green energy sector, etc. Now, copper has moved up very strongly due to supply side constraints such as ban on sulfuric acid exports from China and higher demand due to AI, power grid, and clean energy projects. So if you see, that's what I was talking about. Commodities will do well. So if you see, you can easily see how the copper prices are now at all-time high. Bitcoin is also behaving like a high beta Nasdaq stock. So if Nasdaq is doing well, it is also doing well. S&P 500, six straight, to see here, six straight winning week. Similarly with Nasdaq, it has broken that trend line. So it is expected to do well now, basically on AI theme rally. And Dow Jones is somewhere closer to its all-time high. Now coming to India, India VIX came down because uncertainty has reduced a bit. Things are more stable, so it came down. It came down to close it around 16.84 from the 20 odd level, so which is good. And if it goes below, say around this 15-14 level, then things will normalize from here. Uh, Nifty, if you see here, it's in a narrow range. If you see last 3 weeks, it is in this range. So the support is at around 23,800 odd, 750, 800, and resistance at around 24,600. So this is a narrowing range. This candle was indecisive. So this and it is in this range due to underperformance of IT and banking. And also stock markets, if you see here on the daily chart, they declined on Friday due to rising geopolitical concerns, weakness in rupee, and selling in financial shares. As I showed you, VIX has declined, so the volatility has reduced, so it has become range bound. But the other thing to be seen here is that all these moving averages are flattening out. So a strong directional move is likely. Moment these moving averages start flattening out, a directional move comes. So be careful with this. As I showed you, mid cap and small cap indices are outperforming the benchmark. Nifty Bank, so if you see, it was up around 0.82% on the weekly chart. Small bodied candle with shadows on both sides. So if you see shadows on both sides, uh, reflecting indecisiveness, there is nothing much which is happening. And if you see the daily chart, so this lower level, five candles in the week, it went up after the low. So 54,200, this level 54,200 is the lower level, lower support, and the level of 50 EMA, which is around 56,050 odd, should be a resistance. So this is the zone right now, 54,200 to 56,000 for the Nifty Bank, but it is looking weaker after the PSU banks and SBI, bad results. So HDFC Bank is just consolidating, moving nowhere. 800 to 810 is the resistance right now. Similarly, with ICICI Bank, it is also declined. 1300, 1310 is the resistance. Reliance, after a good performance last week, just consolidated. So it made a doji. So it's just trying to figure out which direction to go from here. Uh, Otherwise, autos are leading. So if you see Motherson, Bajaj Auto, Bharat Forge, Mahindra and Mahindra, etc., doing well. Now, one stock which I have been mentioning about, safest stock to play is Apollo Hospitals. So it made a fresh high and it's heading higher. So it is. This is one stock where you can hide also. So that is one advantage. Now I'll cover two stocks. First is CG Power. It has got basically two segments. One is the power systems, which key products are transformers and switch gears. The other is industrial systems. Key products are low and medium voltage motors and railway signaling equipment. Now they got roughly order inflow of around 19,600 crore, up 34% last year, due to strong inflows in power systems division. So their power system division is doing well, very well. They are increasing their transformer capacity to 1 lakh 10,000 MVA after the current ongoing capex to meet demand from the green energy corridor and data center capex. Industrial system performance was relatively weaker on inflows and revenue, while price hikes of nearly 17.5% taken during entire year helped in passing through the raw material cost inflation. So for industrial system, the demand is weak, but they have been able to pass on the higher cost, raw material cost. So the margins have been slightly stable. Expect power system division's revenue to clock 36% CAGR over FY 26-28 with an EBIT margin of 22% for FY 27-28 and medium industrial system segment to deliver 6% revenue CAGR over FY 26-28 with an EBIT margin at 9.4 to 10% in FY 27-28. Market share of IE3. IE3 is International Electrotechnical Commission, mandatory baseline for 0.75 kilowatt to 1000 kilowatt motors. Each class represents lesser loss in energy loss due to heat in any motor. So they have got good certification for that. So the market share is 38 to 39% for low tension motors and 19 to 20% for large industrial motors. Railway business offers significant growth potential supported by new product development, exports, and service opportunities. Now, they are doing well in this GIS, that is gas insulated switchgear business. So, 400 kV GIS projects remain on track with phase 1 already tested and phase 2 expected between second and third quarter. Commercialization of 400 kilowatt GIS product is targeted in FY 27 following completion of type testing at international laboratories. Now, coming to their most attractive subdivision, that is semis. CG Semis uh, G1 OSAT facility is now operational with a peak capacity of zero point 0.5 million units per day. So they are making 5 lakh units per day right now, chips, while their G2 facility for 14.5 million units per day would be completed by end of calendar year 26. So right now it is loss making, but expect the losses from OSAT division to begin narrowing down from FY 28 as the second phase of capacity expansion would be completed by end of calendar year 26. So as the operating leverage comes in, the losses will reduce. So now let's see their this quarter earnings. 25% uh, earnings growth, revenue growth. And if you see there is a consistency now, at least it is above 20%. That's why I written that it is like a coffee can stock, CG Power. EBITDA this quarter went up 35% because the margins have improved to 13.7%, and PAT was up 30%, 33%, 33.7%. For the full year, they did around 12,418 crore revenue. So as I show you, with this kind of revenue, and now I'll compare it with the order book, then you will understand that roughly 12,400 crore revenue they have done in FY 26. So order should book should be slightly more than that. And if you see over the years, the PAT margins are now improving and stabilizing to around 10%. So if they do around and the margins, PAT margins keep improving. So if they increase their revenue, say by FY 28 to 2 lakh crore, so sorry, 20,000 crore, sorry, 20,000 crore, they should do a 10% plus around 2,000 to 2,100 crore of profits, and their market cap is roughly around right now 1,37,000 crore. So they are for FY 28 around 60-65 times. Now their segmental revenue. So if you see power system, this is the one segment which is doing well. But compare the total revenue also. So the power system grew 49%, while industrial system only went up 2.3%. But if you see, the net revenue of power system has been going up quarter and quarter, and industrial has been roughly stagnant. So they are now more focusing on power systems, semiconductors. So if you see here, FY 26 first quarter they did 108 crore, and then they did 127, then 110 crore, and now they did 155 crore. So they are increasing. So in FY 26 they have done roughly 500 crore of business in their semiconductor subdivision. and it is better than what was the estimates. 102 crore was estimated for fourth quarter, so it is better than that. So this is part of the segment which will drive their revenues and profits subsequently. Power system margins are improving. They have reached 23.8%. Because of pricing power, and industrial systems have reached 9%. Semiconductor is right now loss making. EBITDA margin, EBIT is loss making, but these are also reducing. So as a overall, the business is doing decently. So now if you see here, and I was mentioning about this, they have roughly at the end of fourth quarter, they have a 17,000 crore order book, and they did roughly around 12,400 crore of business. So they have revenue visibility of at least more than a year. Now, of this 17,000 crore order book, 74% is power systems, industrial systems is 18, and others are 8%. So they are more focused on power system. Order inflow increased 39% uh, year on year every quarter. This is in millions, so they got 5,335 crore orders. So fourth quarter order inflow, 57% power system, industrial systems, and others. So revenue has increased 24%. EBITDA margins expanded 110%. So EBITDA margins are improving. So that will try to go into profits. Semiconductors, if you see, the revenue is improving, and consolidated PAT is now was up 34%. So it is basically a 20% plus revenue growth and 30% plus PAT growth stock. So you can see that way. That's why it is at higher valuation. Power systems order inflow increased 72%. Power system revenue growth was healthy and margin expanded 270 basis points. Industrial systems order inflow declined 22% and year on year, and revenue growth was weak, but the margin contracted 200 basis point year on year. So there are issues with that. So they are more focusing on the power systems right now. So if you see here, projection wise, they are projected to do around 15,586 crore of income in FY27 with improvement, and for both the years FY27 and 28, 25% growth on revenue. Margins are expected to be improving now as they get pricing power, and they get more focus on power systems. So the PAT, which I was mentioning about, they are expected to do around 2150 crore. So anything above 2000 crore makes it with makes this stock around 65 67 times now, etc. So PAT is expected to go up around 30% consistently from here. So they are expected to do around 10 rupees EPS 10.2 in FY27. So uh, for FY27 wise, this stock is expensive, and even in FY28 wise, this stock is expensive. So don't have to just buy it like that. So wait for dips to buy this stock. Now, if you see the chart, it consolidated around this for a long time. This consolidated in this 650 zone, and actually this is where we accumulated. And now subsequently with the dip, it took a support at somewhere around this 20 EMA, and it is going up. So every decline now, since it has moved away from the 20 EMA, and it is slightly overbought, so you must wait for a dip to buy this stock. But this is for long term compounding, and if you are holding it, just keep holding it, don't look to exit. Now the other stock is Pidilite. Now it has got core Fevicol, MCL, Fevikwik, Iridite. Then growth brands are Fixit and the others, where they are growing with new kind of uh, brands and other issues. And Pioneer Haisha is there, is the paint segment. They are trying to get into that, and other Feviseal and other kind of thing which they have got. So they have Pidilite also has two segments. First is consumer and bazaar, and the second is business to B2B segment. Now, consumer and bazaar is the absolute crown jewel, consistently contributing approximately 80% of the company's total revenue. While B2B segment handles large-scale industrial resins and pigments, the consumer and bazaar is what makes it a household name. So in adhesive and sealants, they have Fevicol, M-Seal, Fevikwik, Fevistick, stationery. Actually, for anything which for adhesive or something for stationery, people only say Fevicol nowadays. Nobody asks for an adhesive, etc. Construction and paint chemicals focusing on waterproofing and structural repairs. Dr. Fixit, waterproofing, ROF, tile and stone solutions, and newly launched Haisha, their decorative paints. So, consumer and bazaar is the moat, which is its distribution and influencer network, which is incredibly hard for competitors to replicate. 70% of the organized adhesive market in India, they are controlling. Our volume growth is at 15.3% year on year, an 8 quarter high compared to 9.8% year on year. But that is also a reflection of the basic economic activity in the country. Consumer and bazaar segment volume value growth at 15.4% to 15.9% year on year. B2B segment reported volume value growth of 14.8 and 9.3 year on year. Gross margins expanded 156 basis point year on year to 56.6%, aided by lower input costs, while EBITDA margins improved sharply by 310 basis point year on year to 23.2%. Management intends to leverage their existing dealer network to gain share in paints, which is a highly competitive space. There is a massive delta difference between revenue growth 14% and profit growth 37%. Suggest that its moat allows them to retain the benefits of lower input costs rather than being forced to pass them all on to consumers immediately. So they are in no hurry as such. Now, if you see their earnings, quarterly earnings, so year on year they did net sales of 14% plus. EBITDA was up uh, 31%, and reported profits were up 37%. So uh, the sales have to be seen year on year. So they did well in this quarter. And if you see the trend, so see revenue has been constantly improving. Third quarter is generally the best quarter for most of the construction businesses. And now this will again, now the first quarter will be again good. Overall, volume growth is now gone into double digit. It was actually barely in single digits. Now it is 15.3%. Domestic CNB volume growth was 15.4 and industrial B2B was 14.8. So the margins are stable, oblique improving. And because of that, there is a longer term earning visibility now. So if you see simply the consumer and bazaar segment, PBIT, profit before interest and taxes, was up 34%, while B2B, the PBIT was 17.2% year on year. So they have done well. For the full year also, uh, they are reasonably good business. Now, if you see the chart, now because of these concerns over war, etc., it made a low of 1260, and from there it has zoomed up, and after the result, it went up with uh, large volumes, and then we saw a profit booking after that. So that's the first lesson: don't chase on good results. Let it cool down a bit. Now, if you see here, for any breakout, it has to go above this 1500 1520 levels. So that should be a breakout. This is will come once the mutual funds and other institutions will start putting money into this. But for here, this zone like was the first entry around 1470, and the next should be around this 1440. Now there is a gap here. This gap may get filled, so it can dip. But once the buying comes, we'll have to see here. The RSI is good, and for long-term investors, this is a decent stock to accumulate on all tips. I have finished. We'll take questions now.